Hello. This morning I would like to discuss two topics. So the first one is some comments about the extremely low volatility we are seeing on the S&P 500 index. So I will show you that it's extremely unusual to see such a sustained rally without any significant correction. Then I will talk about a few DeMark signals I'm just getting on different markets. So first of all, so this chart shows the last time we had a 5% correction on the S&P. So I looked at this statistic since the early 1990s. So as you can see here, so we haven't seen a 5% correction this year on the S&P. So for me, it was a big surprise because, as you know, I was expecting such a drop during the summer, but we didn't saw it in August. So now it's almost 15 months since the last correction. Notice that this has not occurred since the mid 1990s, so almost 20 years. So which is extremely unusual. So here you can see the S&P since last year, since the year 2016. So no significant setback since June 2016. So this is a very, very long period, and for me it's not really healthy because the market at one stage will need to consolidate, which means we will need to see a 5 to 10% decline. So here is the last bull run, so that can be compared to what we are seeing right now. So as you can see, this is the year 1995, which is funny is that it's when I started working on financial markets. So I lived this period, and it was very similar to what we are seeing right now. So it was the Goldilocks scenario. In 1995, 1996, 18 months without a 5% decline. So it would mean that we are somewhere here. So as you can see, the outlook is not really very bright. Another similar period, 1993. 15 months without a 5% drop. Then after that, a full year of consolidation. What is quite interesting is that in both cases, so in the mid 1990s, the bull run ended with a significant rise in bond yields. So that's for me a very, very important thing to monitor, to keep an eye on. So bond markets. Now, so I will discuss a few DeMark signals I noticed yesterday, so between Wednesday and yesterday. As you can see, gold completed yesterday a setup 9 buy close to a TDST support line. So I like a lot this type of signal. So the conjunction of a daily setup 9 buy and right close to a TDST support line. Also, I noticed that a lot of gold stocks completed over the last few days setup 9 buys as well. So this was the case in particular of Anglo American yesterday. Now, US 10-year bond yields, they also completed a setup 9 sell. So for me, the message is relatively clear. If you shorted T-note over the last 2 weeks, I think it's time to book some profits on the short trade. And if you're waiting for a pullback to buy US bonds, this could be a good opportunity to start doing so right now. Another setup 9 sell was registered yesterday on the S&P Mini. So as you can see, it's not the first one. We saw plenty of setup 9 sell this year, and the S&P continued to rise. Anyway, as you can see, a setup 9 sell is usually followed by whipsaws, and usually a consolidation period. So once again, the fact that we completed a setup 9 sell on the S&P yesterday suggests that the market will probably become a bit more volatile in late September and October. Yes, no, so it was on Wednesday, also a setup 9 sell on Euro Stock 50. The other interesting signal was a setup 9 buy on V2X, which is the implied volatility, 3-month implied volatility on Euro Stock 50 options. So this VSTOXX index is back near its March low. So once again, a very, very low volatility, implied volatility, and implied volatility. It's almost impossible for implied volatility to go much lower. So for me, the message from this chart is that implied volatility is extremely cheap. So if you want to hedge your portfolios, the best way to do so is to buy put premiums. Thank you for listening and have a nice day. Bye.